As of early pre-market trading on Tuesday, August 4, 2026, DataVault AI Inc., trading under ticker DVLT on the Nasdaq, sits at $0.36 per share, up roughly 7% from yesterday's closing price of $0.34, recorded at the market close on August 3, 2026. While regular trading hours are currently closed, early orders show active volume building up around these microcap levels. Most retail traders looking at ticker symbols trading under 50 cents immediately assume they are looking at a dying penny stock on its last legs, waiting for an inevitable reverse stock split or dilution wave. The crowd assumes that a price tag below 40 cents means institutional capital has completely abandoned ship. But when you look beneath the surface of the price action, the reality tells a much more intricate story about how high-frequency algorithms, retail speculation, and restructuring plays actually function in microcap equity markets. The prevailing market narrative around DataVault AI Inc. is straightforward on paper. Investors who follow retail message boards or track high-beta penny stocks through a Robinhood app or individual brokerage usually class this company as a high-risk microcap lottery ticket. The general consensus is that microcap technology plays are purely vehicles for short squeezes, momentum pumps, and day trading day flips rather than serious long-term enterprise holds. People see a company that transitioned its identity from Wysaw Technologies Inc. into DataVault AI Inc., and they immediately assume it is simply riding the artificial intelligence narrative wave to attract quick retail capital. That is the expectation. The reality, however, is that DataVault AI Inc. is attempting a fundamental structural pivot by blending high-performance computing, acoustic intellectual property, real-world asset tokenization, and enterprise data valuation protocols. Whether that pivot translates into sustainable revenue or remains a high-wire speculative act is the real question every serious trader needs to answer. When examining the recent daily price swings, volume spikes, and order flow metrics, you see classic patterns that define lower float microcaps. DVLT has traded in a wide 52-week range between 25 cents and $4.10. That kind of volatility creates massive sharp spikes followed by long periods of consolidation. When retail traders execute trades using Robinhood stock trading, SoFi active investing, or Interactive Brokers stock trading, they often get caught buying the tops of these intraday surges. High-frequency algorithms capitalize on retail momentum by driving price spikes on high volume, quickly absorbing liquidity, and then allowing the stock to drift back down to support levels near 33 cents. Average daily trading volume often sits in the tens of millions of shares, showing that despite the depressed per-share price, liquidity remains high enough to attract active day traders across major investing sites and online investing platforms. Institutional activity in tickers like DVLT offers a sharp contrast to standard megacap allocations. When institutional investors manage money through platforms like Fidelity Wealth Management, Schwab Intelligent Portfolios, or broad market Fidelity ETFs, they generally avoid microcap stocks trading under $1 due to strict risk mandates and exchange compliance guidelines. However, specialized microcap funds and quantitative market makers actively trade these order flows, rather than buying and holding shares long-term like they might with Nvidia stock, Apple stock, or Tesla stock. Institutional desks often trade the volatility surrounding corporate announcements, revenue target updates, and patent filings. They take advantage of retail momentum generated through social media, using Interactive Brokers platform tools to manage rapid entry and exit points while retail buyers hold through the pullbacks. To understand where DataVault AI Inc. sits today, it is essential to look at what the business actually does beyond the ticker symbol. Headquartered in Philadelphia, Pennsylvania, the company operates across two major divisions. Its data science division focuses on high-performance computing, artificial intelligence software, data management platforms, and real-world asset tokenization across sectors like sports, entertainment, biotech, and real estate. Its proprietary platform utilizes patented tools like Data Value, Data Score, and the Information Data Exchange to help enterprise clients visualize, evaluate, and monetize their proprietary data streams. Meanwhile, its legacy acoustic science division stems from its roots as Wysaw Technologies Inc., specializing in spatial audio and wireless audio intellectual property. Management has laid out aggressive revenue targets for 2026, attempting to demonstrate that its intellectual property can yield real commercial contracts. Looking back at past performance and older financial filings reveals the financial friction that creates the current low share price. Historical quarterly earnings show consistent net losses and heavy operating expenses, driven by research, development, and administrative overhead. From microcap technology companies, burning cash while attempting to commercialize complex software platforms is a standard hurdle. To stay funded, such companies frequently rely on capital raises, debt restructuring, or equity issuance. This dilutive pressure creates a heavy overhead supply of shares, which explains why the stock has struggled to hold rallies towards higher price targets. Investors tracking their portfolios on Fidelity Brokerage, Robinhood Investments, or SoFi stocks have watched the market capitalization settle around $300 million, reflecting a market that is demanding concrete proof of top-line revenue growth before re-rating the stock upward. Comment below how many shares of DataVault AI Inc. you currently hold in your portfolio, or if you prefer trading major tech names like NVIDIA stock instead. Evaluating the future outlook for DataVault AI Inc. requires weighing potential positive catalysts against real operational risks. On the upside, if the company successfully executes on its data valuation contracts and hits its corporate revenue targets, the narrative surrounding the stock could change rapidly. Enterprise adoption of artificial intelligence tools for asset tokenization and data monetization is growing across multiple industries. A sudden influx of institutional licensing agreements or high-margin software revenue could spark an upward repricing, catching short sellers off guard and offering substantial upside for early speculative buyers using an individual brokerage or self-investing accounts. However, the downside risks remain significant and cannot be ignored. The primary risk is ongoing capital dilution. If operating cash burn outpaces revenue collection, management may be forced to issue additional equity, diluting existing shareholders and putting downward pressure on the stock price. Furthermore, operating below the $1 threshold on the Nasdaq exchange introduces compliance requirements regarding minimum bid prices, which can lead to corporate actions like reverse stock splits if the share price does not recover organically. For investors utilizing interactive brokers account management, SoFi robo-advisor strategies, or standard investment help channels, managing position size in such high-risk microcaps is essential to protecting overall capital. When comparing a microcap play like DVLT to established tech giants like Apple stock, Tesla stock, or broad mutual funds, the risk profile is completely different. Core holdings in Fidelity mutual funds or an intelligent portfolio are designed to compound capital steadily with lower volatility. Speculative allocations in microcaps like DataVault AI belong in a separate category entirely, where traders seek short-term momentum or asymmetric risk-reward setups rather than passive retirement growth. Whether you execute trades through the Fidelity mobile app, Robinhood app, SoFi trading platform, or interactive brokers trading systems, navigating this market requires strict discipline and constant monitoring of SEC filings. In summary, the story of DataVault AI Inc. is a classic study in the gap between expectation and reality. Market expectations view the stock as just another low-priced penny stock struggling with cash burn and downward momentum. The reality is a company attempting a major technology pivot with patented intellectual property in data science, artificial intelligence, and asset monetization. While the long-term viability of that transformation remains to be proven through actual financial earnings, the high trading volume and active intraday price action show that the market is paying close attention. For traders and investors navigating modern online investing options, keeping a clear head and focusing on real balance sheet numbers rather than pure hype will always be the key to making rational decisions in high volatility equities. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly.